What's happening, everyone? Today we're checking in for another crypto market analysis video, BTC at all-time highs. Exciting times. We're going to look at what's to come next, what I'm looking at, and a general overview of the market. But before we crack on, it's time for the disclaimer. This is not a signals channel. The content here is purely educational. I am not a financial advisor and the content in these videos is not financial advice. This video is also not intended for the residents of the UK. Now, with all that said and done, let's crack on. So I'm sure everyone's aware of the higher time frame picture on BTC, but in case you're not, this is the weekly, okay? So we're back up at previous all-time highs from the last cycle. And yesterday we took out that 69k level here. And all in all, the higher time frames are looking incredibly strong. Now we can just scroll down to the slightly lower time frames here. Here we're looking at the 4 hour. And we can see basically that price action was just a slow grind up into this previous all-time high level. Then we had a wipeout, which took out a bunch of leverage out of the market on the 24th, and then a grind back up to that 69k level with a sweep yesterday, officially taking it out, closing back underneath, and now we're just hanging around underneath that level. So just going down to the slightly lower time frames here, we're on the hourly, and we can see that sweep in much more detail. And there's really two ways we can look at this market right now, okay? So the first would be that we swept both a local and a historical level, took it out with a swing failure pattern, closed back underneath with a nasty hourly candle, came back up to retest that level, and now we're failing underneath, which is of course the bearish outlook, which would suggest that we've got much more downside from here. Or we can look at it through a different lens and say that, the trend is clearly up here. And essentially all we're doing underneath this level is just consolidating prior to a proper breakout, okay? What also gives the latter argument much more credence is the fact that we did have this huge wipeout of leverage on the 24th. And also, of course, that we're taking multiple stabs at that 69k level. And this isn't just one streak up and stab at the first attempt. Now, just a quick look over on the aggregated flow side of things. So you can see that when we did have this wipeout on the 4th, we actually collected a ton of negative delta, both across the spot markets and the perp markets. From that point in the grind up back to 69k, things were pretty balanced here, okay? But then when we did have that sweep yesterday evening, we can see that there was a significant amount of positive delta collected across both the spot and perp markets, and it being predominantly on the spot side, okay? Now, this amount of positive delta, especially on the spot side, as we swept a higher time frame level, would normally be a major cause for concern for the bulls. But as you can see, we had tons of negative delta here, both across the spot and the perp markets. And I wanted to do a separate video on this, but I'll just cover it here quickly, guys. So let's say that we are in a very strong uptrend as we are now, and we see equal amounts of negative delta and positive delta very close to each other. In this case, do you weight them equally? Do you lend more credence to the negative delta, or do you lend more credence to the positive delta? Now, this is a question I just want you guys to think about for a sec. And I'm sure you can guess where I'm going with this. The answer is you lend more credence to the negative delta. Now, you may be asking me, okay, ONF, why is that the case? Okay, you said the negative delta and the positive delta were equal in measure. So why would we lend more credence to the negative delta? And the answer is quite simply because the trend is very much to the upside, and as a result, we have to factor that into our decision-making process, and that always has to be the driving force behind our analysis. Okay, so now that we've covered BTC, we can take a quick look at ETH and the altcoin market. But before I do, I'm going to take this moment to please ask my viewers to like, subscribe, comment, and hit notifications for future content. I appreciate all the feedback and comments from old loyal subscribers and new ones alike. So yeah, please let me know what you think about the video and what you'd like to see in future content. So ETH, we're looking at the weekly here, and you can see that ETH just has some catching up to do against Bitcoin. you can see BTC is all-time highs, and ETH still has about 24% to go. And you know, I've been saying this from this clean SR flip here, that you know, it's a simple catch-up play from ETH to BTC, and that catch-up to ETH at all-time high at the 48.68 level is just a matter of time. We're very much approaching it in the right momentum, and things are starting to look better and better on the ETH side, okay? Now, again, panning down to the lower time frames on ETH, you can see on the 4th, we of course had a similar wipeout as we did on BTC, and you can see that ETH actually dropped over 16% and did so across the span of just 5 hours. Now, as we covered off on the BTC aggregated Delta side of things, it was a slightly mixed bag with both negative and positive Delta. Still skewed towards the negative Delta, of course, because of the trending conditions that we have, as mentioned before, but also because we did have more significant clusters across both spot and perps on the 4th. But you can see on ETH here a completely different picture, okay? ETH has much more significant negative Delta across both the spot and perps market. And because BTC only really collected that positive Delta as it swept and took out all-time high, whereas ETH didn't, ETH actually doesn't have any of that positive Delta present at all. So yeah, on the ETH side of things, the Delta is looking very healthy, guys. Price action is looking great. We're in a clear uptrend. And yes, we will get wipeouts like we did here and here, okay? That's natural in uptrends. But as you can see, we have moments like this, 16% correction within 5 hours, a huge amount of negative Delta created across both the spot and perp side of things. And was it a cause for concern? No, all it was an incredible buying opportunity. And now we're back up at the highs, scratching 4K and looking in a very healthy position. Now, a quick hop over to Total 2 on the weekly, which we've covered off multiple times in recent videos, but I will keep revisiting this chart, okay, guys? And, you know, like I said before, we had the pump, the drawdown, accumulation, flip of this key SR level. We had this mini consolidation above the SR. Then we had exactly the same fractal play out here, guys. And you can recall from my video a few weeks ago, I mentioned when we had flipped this level and we were in this consolidation zone and we were yet to push up. Well, you can see what's happened here, guys. It's gone exactly to plan. We flipped that level, held, consolidated, pushed up, and now we've got some strong weekly closes. Now, to those of you that are reaching out asking me if, you know, I'm still bullish or if I'm waiting for a correction, or, you know, definitely not. I've been positioning into altcoins for the last 6 to 12 months, building long-term positions on my spot bags and trading accordingly as well. And yes, we will get corrections along the way like we did on the 4th, but you can see that these dips are just simply buying opportunities. Or of course, if you're already maxed out in position, then you simply have to just hold and sit on your bags. Now, I did cover off in my last video the ultimate guide to the 2024 bull run to always have some ETH and stables to hand. And, you know, I really hope that wipeout on the 4th showed you guys the importance of doing so. And yeah, if you recall, when I recorded that video, I was talking about seeing these pullbacks as opportunity and not something you need to stress about. And yeah, I really hope some of you took that on board and it helped you to tackle that moment. And, you know, guys, if it didn't, that's okay. Everyone has to learn, and I can tell you a bunch of stuff over and over again, but unfortunately, you're going to have expensive tuition fees that are only going to come from your own experience. And if you didn't tackle the 24th, you know, really how you'd like to, then that's okay. You know, give yourself a pat on the back, practice kindness to yourself. But most importantly, note down where you went wrong and exactly how to improve for when it happens next time. Because guys, I can assure you that may have been one of the first, but it is certainly not one of the last. Anyway, guys, I hope you enjoyed today's market update as I continue to guide you through this bull run. And as always, I'm here to help each and every one of you. So if you have any comments or concerns, please leave them in the comments section. And also just leave any general comments about your thoughts on this video and if you liked it. As always, I love hearing from all my subscribers and wish you all the very best in the markets. So on that note, I'll leave you there. Happy trading, and I'll see you next time.